Dividend and interest. Under this topic, we will now study about interest, the meaning of interest, and the features of interest. Let us now understand what is the meaning of the term interest. Borrowed capital, that is, the capital that is being taken from the general public or banks and financial institutions. This is a type of capital which we call as borrowed capital. This capital has to be returned after a stipulated time period as has been decided before the borrowing terms are taking place. And so this amount, that is the borrowed capital, has to be returned, and it is for fulfilling the short-term and the medium-term requirements of the company. The company may borrow capital even for the long-term requirements. The lenders receive income that is known as interest on their investment. This rate of return has been to be decided at a pre-decided rate. And so the lenders are going to give this money on the terms and conditions which are going to be decided before lending this money. The interest and the principal amount has to be repaid irrelevant whether the company makes profits or not. Therefore, interest is known as the cost of renting money for the borrower, and it is an income for the lender. So, we call interest as the cost. That is, what is the amount of interest that is going to be paid for the principal amount. The principal amount, as long as it remains with the company has to pay the cost for it, which is known as interest. Let us now understand what are the features of interest. Interest is a price paid for productive services rendered by capital. So, it is a price, that is, this amount has been borrowed by the company. It is borrowed for the purpose of running the business. It may be borrowed for purchasing any assets, huge assets of the company. Therefore, this amount that has been taken from the general public or financial institutions or by any way, and it is in the form of borrowed capital, so it is the price that is going to be paid. As long as the company is having this money, that is the principal amount, the income has to be paid to all those lenders, and this is known as interest. It is directly related to risk. That is, higher the risk, higher the interest. So, if the company is going to borrow this money and the lenders are going to invest in this amount, if at all there is the security, then the risk is lesser. But it is directly related to risk. That is, if there is the secured assets against these borrowings, then the interest rates are comparatively less because the risk is also lower. Unsecured capital, that is the unsecured borrowed capital, is facing higher risk. In such a situation, the interest given is going to be higher. The rate of interest is given on per year basis. That is, the interest is going to be given on per annum. So, this amount is going to be given on a yearly basis, or which we say that this amount is going to be given per year itself. The rate of interest depends upon various factors. So, here the money supply in the market that takes place. The money supply in the market will decide the interest rates that are going to be there for the borrowers. The amount of borrowings. The amount of borrowings that the company is going to borrow. If a company is going to depend more on the borrowed capital, it will have to pay a heavy interest rates. Inflation rates that are existing in the market. Government policies. Fiscal policies. That means those measures that are employed by the government to stabilize the economy, that are going to be introduced by the government time to time depending on the economic situation of the country. So, this rate of interest is going to depend on various such factors. It is a charge on the profits of the company. Whether the company makes profits or not, interest has to be paid to the lenders. Therefore, the company has to pay this. Even if the company is going in losses, then the company may have to take another loan to pay off this income. The company will have to pay off this interest charges whether the company makes profits or not. It is payable at a fixed and predetermined rate. This amount has been pre-decided as to what should be the interest that has to be paid. And so, irrelevant of the company's profits, this amount has to be paid at a fixed date, at a fixed rate that has been pre-decided. Therefore, we can say that interest, it is going to be paid to borrowed capital lenders like debenture holders, depositors, bond holders, banks, financial institutions, etc. So this interest has to be paid on this borrowed capital lenders. Thank you, one and all. Please do like, share and subscribe to my channel, The SP Educator.